Alright, so in this video we're gonna find out whether is this area the valid order block or is it not, right? So in my last video I did specify the 5 confluences that we need to confirm a valid order block and how to identify these confluences on the area of interest, right? So remember, each and every time there is a fair value gap, it always goes hand in hand with an order block, right? So that's how I managed to select this area right here, which is our order block for the moment until we confirm it and we verify it, right? So remember, I said the first thing that we look for is the sell side liquidity. The sell side liquidity is the low that was responsible for forming the order block has to be taken out by the same order block, right? But remember, this is a daily time frame, so and you can see on internal structures we've been dropping or going down, right? So we don't have the sell side liquidity in this case on a daily time frame, but then we're gonna check it on smaller time frames. And also remember, I said we don't have to confirm all 5 confluences, but to be on a safe side we have to be 90% correct, right? So meaning we have to be 90% right all the time, meaning out of these 5 confluences, at least let's have 4 confirmed, right? Okay, so now that we have this candle, there were sharp movements going to the upside direction. That's how we got a fair value gap, right? Let me draw a fair value gap right here. So a fair value gap is basically this gap that is formed when we have impulsive movements, right? And impulsive movements are always preceded by an order block. So in my definition, I said an order block is the last opposite candle before the market went in the other direction, right? Okay, so now we have number 2 confirmed, which is the fair value gap. We have this number 2 confirmed, which is the fair value gap, right? And then we continued having these impulsive movements going to the upside direction. So now our third confluence, remember, it was the buy side liquidity. So I said in my last video, we're gonna form the last higher high, right? We're going to form the last higher high, meaning we're not gonna form any more higher highs after this higher high. But then what we have to do is we have to take out this higher high by a form of liquidity. Some people call it buy side liquidity. So that is our third confluence. We are sweeping out the last higher high that we just created. And as said, each and every time we are taking out a higher high, we don't close above that higher high, because this is only a liquidity sweeping, right? So if we are taking out a liquidity, we are taking out in a form of a wick. Let me write here, in a form of a wick. We don't close, right? Because this is a liquidity sweeping. Okay, so I said then the fourth confluence is inducement, and then the fifth is going to be a change of character. But let's talk about the change of character first. So after taking out this high by a form of a wick, we created some change of character in this area. So after taking out the last higher high by liquidity sweeping or buy side liquidity, we form a change of character in this area, right? So the fourth confluence was inducement, but I call it early bias. So remember, when we are creating the fair value gaps, meaning this high momentum going to the upside, so they are buying traders who entered the market, right? So those buying traders, they waited for a retracement after these impulsive movements. They waited for a retracement and came into the market. So they created a buying momentum and a buying pressure that was so high. But remember, in the supply and demand strategy, we always have to take out these early buyers, the people who came in the market early. Some people call it inducement. I call them early buyers. The people who came in the market when they saw those impulsive movements. So they thought the market was going to be going up, 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 up. So they came in the market with buying positions or buying orders, right? So now currently this is a live market and this is where we are so far. And we need one more confluence which is going to be displayed once we get into our demand zone or an order block zone, right? So what I'm anticipating is the market is going to drop and take out all these early buyers right here, right? And then it's going to approach our area, and then we're going to see sharp movements going to the upside direction, creating a change of character. Then that's where we enter. That's when we enter on the retracement. Remember, we don't just jump into the trade when we are seeing impulsive movements, but we wait for a change of character and enter the trade, right? So we're gonna see an order block right here after changing the character, and our stop loss is just gonna be below the order block, right? So the change of character is gonna form like this, right? And after having the change of character, we wait for a retracement and we take an entry. So the only way to see where you can take an entry is to use a fib retracement, and I always said between 70% and 60%. That is where 90% of the time we're going to take a trade, right? So after forming an order block, we're going to take out this high and we're going to have a change of character, and the market is going to retrace back to the order block. That's where we take an entry, and our stop loss is just going to be below this small order block, right? So this is the live market, and we're just gonna wait and see if this is gonna be a valid order block, right? So if this video is informative, please leave a like, comment, share, and also please comment if is this a valid order block, and also are you gonna be taking this trade or you're gonna wait for more confirmations, right?